All right, we are live. What is going on, everybody? What is going on, my friend Derrick? How you doing today?
What's up, brother? Ready to get down? Let's do this.
That's right. Well, before we actually get into anything, the topic of today is how home prices in San Diego have decreased. And really, I just wanted to give you the opportunity publicly to apologize for any comments that you've made previously about the housing market and how wrong you were.
Sure. Yeah, I would like to take this opportunity to apologize to absolutely nobody. We have been pretty much spot on here. There's always going to be fluctuations in any markets, and so what you have to identify when the market begins to change is are we seeing a macro shift or are we seeing a micro shift? Is it something that is, conditional, cyclical? Is it something where the landscape of this thing is changing? Like, has real estate changed? Is something different than it was in COVID when we went crazy when everyone thought they were going to die? Has something shifted? So we were correctly identified this as a micro move, and it's proven to be just that. And I'll tell you, man, we were so close. If bonds had just rallied right there instead of dipping, there was a good moment there where bonds really could have rallied. And if they did, rates would have gone down significantly and we'd have been right back into the frenzy. So we were really close to actually being back into a full-blown bull market. We've receded since. We're down, what, 6-8%, something like that?
Yeah. Well, yeah, I think you're totally right. And first of all, let us know where you guys are watching from. We always like to know where you guys are tuning in from. Are you in San Diego? Are you on the East Coast? Where are you at? We really want to know. And how different is it there than it is here in San Diego? Because, of course, we're talking about the local market. But today, just a quick glimpse of what's going to happen. We're going to go over some articles about recession, about home prices, about rental prices, about inflation. We have a lot to cover today, and we're going to back it up with data. So this isn't just two old farts talking about their opinion and how they never think the housing market is ever going to go down. We're actually going to get into the weeds here. And along the way, you guys throw your comments and your questions in, and we will get to those as well. So without further ado, why do I always forget how to do this? Here we go. We're going to head to our first article. This is from the San Diego Business Journal, and this is about how for-sale housing market hits a snag, but rents are rising. And when you actually get into this, first of all, this is one thing that we bring up all the time is, the headlines and then actually the way that these articles are structured. And so that you get one feeling out of it, even if they're actually saying something else. So what I thought was interesting on this one, and, Derrick and you people watching, let us know if you actually agree with this. This starts with: the association reported a 22.1% one-month drop in single-family homes from June to July and a 17% drop in condo sales. Now, what comes to your mind when it says these drops?
It makes it sound negative.
To me, it sounds like they're talking about the prices have gone down that much.
I'm going to drop in single-family homes. Oh, okay. Yeah, you're true. It's not very clear what they're actually speaking about there.
And now, to be fair, they get into what is happening with the prices right after that. But a lot of people, they only read the first paragraph or two. So when you're looking at this and you're saying, wow, prices have gone down 22% for single family and 17% for attached properties, that is not what this is saying. This is saying that over a 1 month period, they've actually seen the amount of inventory go down, which happens every single year at the end of summer from June to July, every year. Maybe not that exact amount, but that's always when we're going to see the amount of inventory starting to decrease.
Yep. And it's so, and they're talking about, I think, what sales stats there, or number of units or something like that. And truthfully, does that matter too much? Not really, it really doesn't. They're always talking about this number of units. It only really matters if you have a growing inventory situation where you've got so much inventory that inventory is making it a buyer's market. We have not had that happen here since the Great Recession. I don't know if it happened before that or not, but not while I was around. And so let's call it the last few decades. We've had one instance in which that was the case. So I really look at the inventory numbers unless we get to that point, or you get to a situation where we were a few months ago, Dan, where everyone was saying, oh, the inventory spiking, it's crazy. And so we're like, wait a minute, okay, let's pull that up and see what's in here. And it really wasn't. It really wasn't anything crazy. But they did a good job. A lot of people did a good job of making it seem as though there were a crisis, building up. And then just the reality was just like, oh, okay, it's been just a little There's a little spike in inventory. Rates have gone up. What's really driving the slowdown right here, Dan, is just interest rates.
Yeah.
That's it.
Yep.
Nothing else has really affected anything. I mean, the economy, while we're in a recession, still very strong. You're not seeing massive layoffs. You're not seeing crazy things happen. You're seeing normal stuff happen. Businesses are consolidating. Maybe this place is laying off a few people. Maybe this place has stopped hiring. I've seen that. I saw a headline. This company announces they're stop hiring. How's that news? How is that newsworthy unless you're trying to somehow make it seem negative? Who cares if they stopped hiring? So yeah, normal stuff has been taking place. They've been trying to build it up into something bad. That makes me more bullish than anything else, honestly.
Well, and I think we both agree that the interest rates, the mortgage interest rates rising, of course, has an effect on the market. And the question is it going to continue to go up? Is it going to stay where it's at? Is it going to finally start coming down? And all of that we are going to get into here. But I did want to say hello, Evan from Cincinnati, I guess is the new place that people live. And through the head, thank you for the clarification. You're right. Amount of inventory decreasing is ambiguous. I think you mean amount of inventory sold is decreasing. A little blunder of mine in the beginning of this. Don't worry. We're just getting rolling here. So, but I appreciate you mentioning that. The other thing I wanted to mention on this article is, we're always talking about home price values increasing or decreasing or crashing or whatever it is. And just talking about how strong the market is and talking about inflation. It's really interesting when you look over here. Year over year, San Diego rents were up 24% for a one bedroom, from $2,400 to $3,000 for a one bedroom this was for a two bedroom apartment in San Diego. So, wow. And you've brought this up before, Derrick. I think this is really important to remember. If you aren't going to buy a house and you're saying, okay, well, it's just the market's getting a little bit too hot. We could maybe get something a little bit smaller, but we just don't want that. So we're going to go rent because we can save money doing that. Well, you aren't saving money by doing that because rent prices are rising like crazy right now.
Yeah, you're paying up to rent. So you're paying up either way, is the thing. The problem with the rent cycle is, that I don't see this ending anytime soon. This 20% increase in rent thing, it's really a supply and demand situation. When you take demand away from the home purchase market, where does it go? It goes to the rental market. Well, prior to that demand exiting the purchase market, there was already an insane amount of, in fact, Dan, this is a client told me yesterday, she put her house up for rent in Kentucky, I think, or something like that. 143 applications in the first 24 hours. I mean, it's crazy stuff like that that's going on. So moving that demand to the rental market doesn't really do anything but delay what's taking place in the housing market, because rents will go up. People will get even more sick of paying rent than they already are. And that will move and shove people back into the purchase market. So when you see people leave the purchase market for the rental market, just know they'll be back. Others will be back. As that happens, that's usually the right time to buy. If you're really a timing buyer, sure, you really want to buy like when it's like the best time, you'd want to buy when people are rushing away from buying and going towards renting. And if you don't get the best rate, that you've ever seen, because rates have gone up a little bit, that's okay. Just know that within the next couple of years, you'll have a chance to refi, very likely chance to refi for a much lower rate. So you have potential upside. Unlike the guy who bought a year ago, who paid absolute top dollar and probably removed all his contingencies, he got a low rate, but he has no upside. There's no way for that to get any better for him. There's nothing coming. And so being able to, have some upside down the road, potential for a refi, that should also be considered, I think, for people who are looking to buy right now or people who are considering it. Think about your upside. It's not just appreciation. At the end of the day, if you're going to own the home a long period of time, what's your payment? And if that's something that you can see going down in the future, we got to think about that too.
Yep. Let's see. Robert says, I don't know if Amazon suddenly stopped hiring. I might have to stop and take notice. I would say layoffs are probably going to be a bigger factor. I get what you're saying with a very large company like that. What do you think, Derrick?
Well, I mean, the problem is, companies that grow a lot also have to play that into their trajectory. So like if you're a 20% year over year grower like Amazon or, something close to that in the teens, then you're always hiring with that trajectory. So if you go to, let's say, from a 15% annual growth rate to a 10%, you probably are going to stop hiring, or maybe you're even going to lay some people off. But that doesn't mean you're automatically going to stop growing. So it's not, each company has its own trajectory that they're already working off of. So I wouldn't look at just any one company and say, oh, well, if that company stops hiring, then I know we're in trouble. Because if that were the case, you would look at like Walmart and say, well, if Walmart ever lays anyone off, then we're really into it, right? But you can't look at it that way, because believe it or not, Walmart also is a growing company. So the only way you could really use that kind of logic would be if you had a company that was absolutely set. They didn't need to hire anybody else ever, and everything was perfect right now. And so if they decide to fire people, then we know something's up. There aren't any companies like that. So what you really have to look for is, are you seeing mass layoffs? Okay. And it's across industries, not just companies, across industries, across certain income levels, certain types of service providers. Then you would know. And really, you'd have to look at the most solid companies, the AT&Ts, the Verizons, those kinds of companies, to see, are they letting people go? No, they aren't. So if I don't like that logic personally, but I do know that everyone's like expecting these mass layoffs, Dan. And everyone's been telling me this for a long time now. Oh, layoffs are coming. They're going to lay everybody off, and it's going to trickle down, and the market's going to crash. I wouldn't hold my breath.
Well, Robert wants to thank you for that response, because he really liked it. And Joe's watching in from Wisconsin. So thanks for watching in from Wisconsin, my friend. All right, let's get to article number 2. San Diego among housing markets slowing the most. And this is almost identical to the last article, where it, in my mind, states something that just makes you think differently than what it's actually saying. So when you come down here, the second paragraph, while home prices in the San Diego metro area rose 21.6% year over year in June, that figure is down from 30% in March. Now, this one made my head hurt. I had to read it like 4 times before to actually understand what they're saying. In my mind, when I'm reading this, they're saying home prices are down 30% in March. Can you believe that? No, they're saying that home prices were up 30%, and then they went down from 30% to 21.6%, which is about an 8% difference, which is actually what I'm seeing here, more or less. I guess that was from, I think it was from different months, but this is all of San Diego homes, attached or detached properties in San Diego County over the last 5 years. And as you can see, we actually have had home prices come down. I mean, there's no question home prices have come down. But when you're actually looking at this from $860,000 down to $791,000, that's $70,000. That's no chump change. It's no small amount. I believe that's 8%. That's about what I calculated that to. Hopefully, let us know over there, trolls. Yeah. Let us know if it's around 8%. But if you actually look at the trajectory and where we've come from, that's where we were back in February. We're not talking about a market collapse. We're talking about just a market that was out of control. Interest rates shot up like crazy, and then we're basically back to where we were in February. Is that kind of what you're seeing?
Yeah, 8.2% was that decline there. So what the articles like that love to do, Dan, is they love to take like the absolute high, whenever that was, and then tell you how far we are down from the absolute high, like as if that pertains to anybody. There's a few handful of people maybe who bought at that level, but vast majority of people are year over year, or year over year. So, they will give you that worst case scenario when they're trying to make a case for something. And so you got to look out for that. Oh, from the peak in blah, blah, we're down this. If you see that, just wad it up and throw it away, because that is not information that's pertinent. All it is fear mongering, which is what gets clicks on these things. And you got to kind of understand that going into it. But yeah, you can't look at what is the worst case scenario and then print that like that's what's going on in the market. That's such a small percentage of what's really going on. Now, I haven't had a single person that I've talked to at this point who said, man, I bought my house at the wrong time, or man, I'm upside down on my house. I haven't talked to a single person, not one. And I talked to a lot of people.
I've been doing a lot of, I call them real estate reviews. So for my clients that purchased a home the previous couple of years on an annual basis, I'll actually send them a video of me talking about how much their home is appreciated. And I've done a couple over the last week that were my clients from just a year ago. And guess what? Every single one of those are up, and most of them are up over $100,000. So we're going to get more into the numbers here, but
thank you.
Always interesting.
Long story short, people are up huge still.
Yes.
And we're a long ways away from, any type of panic or anything like that.
Yep. We are getting some great questions and comments in here. We're going to try and get through one or two more articles, and then we're going to get to all of those. So keep them coming in. So study inflation's impact, highest in Phoenix, lowest in big California metros. And okay, I think this is the last like semi-deceptive article that we're going to bring up here today. What I thought was interesting here, it's talking about inflation in major cities. It's saying that Phoenix was the highest, but then when you actually look at the study, they're saying here that San Diego is ranked number 13. But when you actually look at the study, it's only taking into account 24 metros. So you can see there are a lot of dots missing from the US here because they're not including any of those places. So, San Diego is ranked 13 out of, it's either 23 or 24.
Yeah.
Somewhere in the middle. I mean, I think my gut instinct would be that inflation in San Diego is higher than other parts of the country, but I don't know. I guess our prices are already so high that the percentage increase is less. I'm not really sure.
No, it's actually, yeah, it's pretty bad here from an inflationary standpoint, but most of that is always tied to housing, right? So
Sure. Yep.
that's the biggest thing, that everyone pays for. And so it makes sense. You're seeing inflation in rent, you're seeing inflation in home values. Real estate is a great hedge against inflation. But here's what I would challenge people on this, and I have talked to a lot of people who are leaving California. Oh, it's so bad. The politics are so bad, or the government's so bad, or there's all these things that are getting so bad. There's droughts and electricity and blah, blah, blah. But what you need to see and understand about California is that all those things are already on the table. Okay. So now imagine, what if they start getting cleaned up? What if you start seeing those things that are negatives start turning into positives? What if you get, a more pro-business government? What if you start to see some of these things that have been holding over people's heads not become an issue? So when there's lots of issues in a situation, just know that that is actually potential, because those things can get better. When things are really great in an area, for example, that's when you got to be a little more cautious because things get worse. Some regulation could come in. This could happen. Big Bear Market is one of those where, right now you got a lot of people who own Airbnbs up there, and I love it. I love Big Bear, but that could happen at some point where Big Bear goes, okay, we're going to put some restriction on these Airbnbs, whatever it is, some little thing. And then all of a sudden a bunch of the market crashed. So it seems really good. Oh, it's Airbnb, we're printing cash, but there's potential downside there because we don't have that much bad news. There's potential bad news to come to the table. So I see things like California and I go, it's an amazing place to live, just, climate wise and all the things you can do. That stuff isn't going to change. So if everything else is kind of like feeling bad, like it's expensive and taxes and this and that, those things could get better. Just keep that in mind. There's a lot of people who want to leave the state, and I understand, I do, but there's also a lot of those people who leave the state, they come right back.
Yeah, I mean, look, things could get better. They could get worse. What I always like to say, and what I really truly believe is, California as a whole definitely leans one way politically. We all know that. But I would say, you have different parts of the state that are very different. I mean, Orange County is notorious for being kind of a red area surrounded by a lot of blue. In San Diego, we absolutely have kind of more progressive policy. However, when you meet people on the street, I would say 8 to 9 people out of 10 are very much in the middle. And I really feel like that is a lot of our culture. The politics are different. And I could see that being a thing that would change here in San Diego at some point. It wouldn't surprise me.
Yeah. Yeah, it is. It's San Diego's a place for everybody.
Yeah.
It really doesn't matter what walk of life you're from or what kind of things you enjoy. You'll be able to find some of your people here. Meanwhile, you'll be able to see epic sunsets, check out crazy cool beaches, and just stuff that we were just like, wow, I can't believe this is my life. And that was like one of the reasons I moved here. I came here and I visited. I was like, wait a minute, people are living here? Like, people do this all the time? This isn't just a place where everyone comes for vacation. People stay here, do this every day like this. Yeah. This is what's going on. I had to come. I couldn't not. I mean, I've never felt such a pull to do something so major in my life. And it just hit me just like it does everybody else. So yeah, just know that when you come visit San Diego, like, come visit. If you're not sure, you're like, oh, well, maybe I'll move to San Diego one day. It's just kind of pipe dream. Just schedule a visit. Come visit. See what happens.
Yeah, there's no doubt the number one negative of San Diego is its it is expensive. But if you get in now, I really truly believe when you look at other places throughout the state, we aren't the most expensive. We're
Correct.
inching up, but there are more expensive places. And I think if you can get in and if you can afford it, I mean, that's why we have people coming in from Cincinnati, Wisconsin. We have people tuning in because they love San Diego. We have some people throughout San Diego as well. Escondido, Rancho Penasquitos. Mike C says we're live. Thanks, Mike. I appreciate the info there. A ton of upside. Affordability is definitely going to be the number one negative. And that's why we like to do these lives and tell you guys exactly what's going on, not only from a data standpoint, because we talk all the time about how the data is delayed. We're going to tell you, we're going to bring it all together and tell you exactly what we're feeling on the ground and give you an idea of what these numbers are going to look like in a month or two from now when they're actually reported.
Well, to answer the question bluntly, you think California homes are overvalued? Some of them are. I would say Northern California is overvalued and has been for quite some time. Sure. Southern California, though, I'm telling you, is a sweet spot in the universe. The climate, the opportunities for having fun, for doing things with your kids, for being outside, is just, it's through the roof, And so for me, I've been all over the world. This is the best place I've ever been by a long shot. There's not really a close second. Maybe Barcelona, close second. Barcelona, way more expensive than San Diego, double. So when you look at comparable cities, and I think there's only one, maybe there's a couple other out there I don't know of, that one is like twice as expensive. So when you look at San Diego from a value standpoint, I can almost guarantee you that 10, 20, 30 years from now, we'll look back on today and go, oh, what a great time to buy. Oh my gosh. Can you imagine if I bought in 2022, where this would be? I really do believe that, because I don't think the world has really fully caught up to the value here in Southern California. And the inventory pinch that we've had is the reason why prices have gone up so much. The real question is, how did prices get so low in the crash? That's the real question. How did that happen? Well, because there weren't funds. Like, I don't know if you see what Meet Kevin is doing, launching his househack.com, whatever. It's like an investment thing you can buy. You can essentially buy shares in his company that's going to go buy real estate. BlackRock's raised tens of billions of dollars. People were ready for it. People have been ready for it. That's why when COVID hit, boom, it came in, guns blazing, money flinging in from every direction. Everyone gets it now. Back then, people didn't get it. Now everyone gets it. Now you've got Wall Street funds, sovereign funds, international funds buying real estate to hold it, because they finally get it. So now we're trying to do our job to help the little guy, to help people like us get it, and get, to understand the macro movement for real estate is up and to the right.
I couldn't agree more. But let's talk a little bit more about what's going on right now. Let's give these people the information they came to see. So here's the next article. Fed seen being aggressive for longer after U.S. inflation surprise. Derrick, you want to tell us what's going on with inflation and how that's going to affect the market?
The inflation numbers, there was a huge overreaction in the market today. Huge overreaction. Mortgage rates went up like 0.25%. Just a dramatic overreaction because the numbers were very small. It did show us that the market believed that the worst inflation information was behind us. Mm-hmm. And it apparently is not. But remember, with these numbers, first of all, the collection of the data is a little clunky. The way that it's all done is all lagging. To me, the inflation numbers were still pretty small. Now, we didn't make a big leap of progress on inflation, and people expected that just because gas prices make up such a big percentage of it, and gas prices have come down so much. It kind of spooked people like, wow, okay, this inflation thing is it's sticky. Maybe it's got legs. Maybe it just won't go away if the Fed raises into infinity. And so that's what you saw, kind of an overreaction today. People were over leveraged in their positions, believing that the worst was behind us. I also believe that to be true. However, inflation numbers were not nearly as bad as the market reacted. Not nearly as bad. Still very small variations, very small stuff we're talking about. I mean, I couldn't believe it. This one inflation reading was up 0.1%. 0.1%. And the market sells off 1,200 points. It's overcooked, Dan. I expect that to probably rebound tomorrow. People to kind of go to sleep tonight and go, gosh, we really were out of whack today. and get back into the groove tomorrow. That's my expectation, because it's not a crazy thing that happened today. It looks like it. If you just look at the tape, it looks crazy. Will the Fed continue to raise? Yes. Why?
Yeah,
because they look at these things.
Yep.
This matters to them. They are bow tie guys. They like to look at numbers and crunch calculators. So they're going to look at those things and go, our job is not done. We must continue to bring the hammer until we see those numbers start to make moves. Now, because that they act like that and they're always reacting to lagging data, they're always going to overdo it. So they overdid it with the stimulus. They're going to overdo it on this side of it too. And I think that may be the thing that Wall Street's expecting today, and why things got so out of control, because the expectation now is that, okay, the Fed is really going to overdo it now. They really have the justification to continue to raise rates. And although that's not technically bad for mortgage rates, the overall sentiment that investment grade assets like stocks and bonds are going to go down in value does cause problems.
Sure.
And we saw that today. So overall reading, Dan, inflation, it's not totally under control yet, but it has definitely, the acceleration has stopped. It's flattening out. We should be on the other side of it in the next 6 to 12 months. It's not something that can happen immediately. I'm sorry, stock traders. It just can't happen that fast. But we are going in the right direction.
And the Fed will increase the Fed funds rate, but that does not mean that mortgage rates are directly correlated. So just keep that in mind moving forward. I did want to show everyone real quick, you know, the Fed continues to raise Fed fund rate throughout the course of the year. This year, this is looking at mortgage numbers over the course of the last 6 months. So you would think if they were directly correlated, it would be basically a straight line all the way up with some big bump ups every single time Jerome Powell says that they're going to increase the rates. But that's not what we've seen. In fact, the rates are just slightly below right now where they were back in mid-June. So we've actually seen it go up and we've seen it go down. This shows conforming rates at 5.9%, jumbo rates at 5.7%. So yeah, what were your thoughts on that?
You know, we just saw a call today, and it's a typical call when you believe that deflation is on the way, that you should be buying long-term bonds. Well, the best long-term bonds are mortgage bonds.
Yeah.
So I really do believe investors will step in. You're correct. Rates are going to fluctuate based on how that paper trades in the market, and you can follow those mortgage bonds on. It looks like they might have something here on this Optimal Blue site, Mortgage News Daily, and let's see, it's mortgagenewsdaily.com/mortgage-rates. And you can basically track all the mortgage rates right there. Those are average rates. So, you know, you may not get as low a rate, or you may get a lower one than that, but you can kind of see what's going on there. And when you pull up, you know, a graph like this, you'll see the trend has been higher for sure. Bonds have been out of favor. Bonds will be out of favor as long as inflation is, you know, sticking its head out of the sand. Inflation may take a little bit longer. That's why I've been telling people, expect to refi in 1 to 2 years from now. That's when we'll see rates drop. Rates will drop when we get on the other side of inflation. It won't be able to happen super fast, because it's just not one of those problems that solves quickly. It takes time. And in order to actually create deflation, the Fed's going to have to do some stuff. People are going to have to back off purchases. We sort of need that whole thing to happen. And it's just going to take time. But does that mean, look at Fannie Mae's forecast. I don't know if you saw that article. They're expecting rates to be on an average rate of 4.5%.
I was ready for it. It's like
you got it.
Like you were reading my mind.
Beautiful. There it is. 4.5% is what they're expecting. And what were we at on that graph? 6 something, or
we're at 6. So they're saying they believe it's going to come down. Now, granted, this was from Monday, August 29th. So this is not from today. This is from 2 weeks ago, a little over 2 weeks. 2 weeks ago. So at the end of the day, do we know what it's going to be at the end of next year? No, absolutely not. But I think this says a lot. You know, pretty much every single person that I trust the most on the lending side of things and in real estate, they're all agreeing. They all believe that mortgage interest rates are going to come down in the next 1 to 2 years. And this is falling right in line with that sentiment. Is it going to happen? Who knows? You know, we don't know for sure, but I think that this is a very good sign.
It's a good point. Anything could happen.
Yep. All right, so just a few more. Now we're going to dig into the data real quick, and then we will get to all your questions over there. I want to know, let us know in the comments, will home prices continue to go down? What is your prediction? Are we just a bunch of crazy real estate agents and loan officers that are just trying to get a sale, or do we actually know what we're talking about? Do you agree with us? What do you think? And then we're going to prove you wrong. Whatever you say, we're definitely going to prove you wrong. All right. So San Diego County market update. So this is the newest data that just came out. And again, the reason why we say this stuff is delayed is because this is talking about August of 2022. And it's mostly going off of, I mean, the main thing that we're looking at here is median sale price. That's based off of closed sales. So that means, properties that closed in the beginning in the middle of August, they actually had an accepted offer a full month before that. They were probably negotiating their offers for a week or two prior to that. So we're talking this is potentially 2-ish months old data. So it's not always going to be so. I mean, obviously it's accurate. It's just a little bit delayed. But when you look at this is saying median home price, and this is split up between detached, single family, and attached. So attached is going to be condos and townhomes, and prices have gone up. It's not like they've gone down in the last 12 months. This is saying 7.1% in San Diego County for detached properties, and the median price home for attached properties has gone up 12.5%. Also, keep in mind, this is very area specific. So the hottest neighborhoods with the best school districts, they're up much higher than that. So where you buy definitely matters.
Nailed that one. There's some areas that are struggling more. There's no question. Yep. There's other areas where it's still hot as a firecracker. If you present your property correctly, you're going to get multiple offers.
Now, here's where it starts to get very, very interesting. And this is where we've had our mindset this whole time, knowing that the market wasn't going to collapse this year. When we're actually looking at the inventory, the amount of homes for sale, this is since 2012. So this is over the last 10 years in San Diego County. One thing that stands out and is very, very evident is this little point on the right is not even close to the average over the last 10 years. We're nowhere near having the amount of homes that we need. And keep in mind, over these last 10 years, this has mostly been a seller's market. It's not like it's been a buyer and seller market all over the place. We've mostly had a seller's market over the last 10 years.
Yeah, there wasn't a single year in that time frame right there that property values went down.
Yeah.
Year over year.
We've had, I think, some quarters or months, but
right.
Not an actual year. And this shows it very well as well. So San Diego County active listing inventory year over year. Now, this is just the last 4 years. The last 4 years aren't even where this peaks out on this graph for the amount of inventory that we've had. San Diego County active listing inventory year over year. Orange is this year. You can see what's happening right now is what happens every single year. It's starting to go down. You're starting to go down. So anyone that's out there and is saying you guys are crazy, prices are going to continue to drop like crazy. Well, look, basic supply and demand. If you look, you have to look at supply and demand, and the supply is decreasing. So unless demand dropped off a cliff and there was nothing there, this isn't going to change. The prices are going to continue. Well, I think if I can, I'm going to go ahead and say, I believe from where we're at right now, the end of August 2022 to end of August 2023, I'm going to say that home prices are going to increase. Maybe not by a lot, but I'm going to say that they are going to increase. So maybe it's going to flatline a little bit over the next couple of months. Maybe, prices could dip a little bit here or there. But when we're looking at a full 12 months, I think we are going to be up by next August.
I would have to agree. It's either going to be a very small change, like we might be kind of in this sideways market for a little while where there's opportunities kind of poking out here and there, or you're going to just see that buyers are back in the game, especially if rates come down as Fannie Mae is predicting next year.
Yes,
then you're going to see people pile in again and prices will be higher. But I think it'd be strange. It would be I'd be surprised, let's put it that way, if we saw prices lower a year from now than where they are here today.
All right. Well, I'm not the only crazy person. I appreciate that. And then if we're looking at demand, so obviously supply and demand, let's look at demand here. Demand year over year. Now, basically since March, it's come down a little bit, kind of wiggled up and down a little bit. So yes, you could say demand is going down as well, but it's almost been a flat line over the last 3 months. And that's exactly what we're feeling out there.
Yeah. Yeah. Good point. That's an interesting one. You could look at that and you could say, oh, look, there's so little demand. Tell that to my buyers who are getting beat up by multiple offers. I mean,
Yeah.
there's some things that the graphs can tell you, and then there's some things that you have to experience on the ground level, to really understand what's going on. And both of those properties, by the way, that I've been talking about, Dan, one's $1 million, Chula Vista. The other one's 800,000 in Spring Valley.
Yeah. Which are prices that we wouldn't have expected to hear even just a couple short years ago.
Right.
All right, here's the last one I have, and then we're going to get into all of your questions. I promise. Keep them coming. San Diego County expected market time year over year. So how long do they believe your home is going to be on the market? Basically, and it says right here, so anywhere from 90 to 120 days is a balanced market. Anything less than that is going to be a seller's market, and the severity of the seller's market is depending on how few days. So where we're at right now, you can see that all this craziness happened. Mortgage interest rates shot up over the last couple of months. Inventory started to shoot up. Sellers started to lose their minds because they didn't know how to react with this market. And then all of a sudden, we just kind of normalized a little bit. And that's kind of what we've seen a little bit over the last couple of months. And I think you and I can both say, Derrick, that we feel we are getting more buyers out there right now. They're finally starting to say, okay, prices aren't dropping like crazy like we thought, but there maybe is some more opportunity. We're ready. We're ready because we don't really see over the next couple of months or over the next year better opportunity than right now. So we're ready. We're going to start actually actively looking and putting in offers. Is that kind of what you're seeing?
I'm seeing a lot of buying activity, and a lot of people who bought a couple of years ago coming back and saying, hey, where do I get a HELOC so I can go buy more real estate? Or I want to buy out of state real estate, or I want to buy an investment property. I've been doing a lot of HELOCs, Dan. not necessarily our ideal loan, but it's one of those things that we have, and we have access to it. We've got good setup for it. And so people getting HELOCs, I always want to take care of clients. So, it doesn't matter, if something they need, something I can provide, I'll do it. So we've been doing HELOCs.
But what is a HELOC? You're saying this word so much. What is a HELOC?
A home equity line of credit, essentially a second mortgage to tap into your equity so that you can then take it and go do whatever you want with it. But most people are either building an ADU, which I think is probably the smartest thing to do, or going and buying real estate. Now, it could be out-of-state real estate they're buying in cash or with big down payment, or buying additional real estate here in San Diego. I work with a lot of veterans, I'm a VA loan specialist. Talking to a lot of veterans who are looking at, okay, hey, I bought this one house. I'm in great shape. I got all this equity. I feel like I should be doing something with it, to use it to my advantage somehow. So helping a lot of veterans do different things. You and I talked earlier, house hacking and different stuff like that people can do with these properties to really make them cash flow positive, doing all of that stuff right now in a major way. And I tell you, these are the kind of moves, like I'm looking at the people who are making these moves and I'm going, okay, is this, because I want to get a feel for the market. Is this like a dingbat? Is this guy a dummy? Is this someone who's like going to, prone to making mistakes? Or is this the type of like ambitious person who's like doing the right things, asking the right questions? Are they grilling me? Are they just blindly following some mentor? I'm telling you, it's the smart cats. It's the people who are like, yeah, this person's going to be successful. I can tell by the questions they're asking, the way they're approaching it. It's the way I like it. I like to look at those things. What I see is a very positive sign, and I'm proud and honored to help these people make these moves that I know are going to work out for them in the long run, for them and their families, especially people who are working in the military. They don't get paid a ton of money to do this job, Dan. They have a lot of sacrifice here. Should be hooking them up, trying to help hook them up. And so I love doing that.
I just sent you, I sent over some your information over to a veteran today that's looking to house hack. So yeah, I know that is really what you're passionate about. I love to see you doing that. And that's why we have these conversations, because you're a down-to-earth guy that really wants the best for people. We're not, I can say it until I'm blue in the face. It doesn't really matter. We're not on here just to sell real estate. We really like to help people. And that's why we're taking an hour out of our, what is today? Hour out of our Tuesday night away from our families to talk with you guys and answer your questions. So talking about your questions, let's get into it.
Yeah.
All right. I know I had a good one here. Okay. So Sunshine Yogini, very nice, says, from Laguna Beach, want to downside. I have a single family residence to sell, to move down, and he wants to move down to get a condo in the coastal market of San Diego. Does not want a mortgage, so I'm assuming he's going to pay all cash. And should I wait until next year around April. Now, this comment or this question was from a little while ago, so we might have answered it by then. The one thing I will say is if you're waiting for interest rates to come down, well, guess what? That just makes affordability better for everybody, which means home prices are going to go up again. The whole reason why we're even having this conversation right now is because mortgage interest rates went up, which made the housing market, the housing market reacted too, because affordability went down pretty substantially over the last 12 months. So my thought is, my wife and I are actively looking for a home right now. We would rather get in on a property right now and have the potential opportunity, which I'm willing to bet on for us over the next 12 to 24 months to be able to refinance. I mean, really over the next 5 to 7 years, but I really believe it's going to happen in the next 12 to 24 months.
It probably will. Very, very likely. By the way, I'm also hawking properties.
Yeah.
We're looking at doing some big things over here, Dan. We're talking about developing stuff. So
Nice.
What I want to do with this question here is, okay, if I'm a cash buyer, you don't wait for rates to get better.
Yeah.
If you're a cash buyer,
That's for
high
sure.
rates, that's your sweet spot. You're just like, come on, because now the buying pool's been diluted. So if you're a cash buyer, you want the buyer pool to be diluted. You want to be able to find a seller who's motivated. And you'll have a much better shot to do that now probably than you will in April. Remember, spring, the best times to sell a home in San Diego historically, April and May. Those are the two best price per square foot months almost every single year, year after year after year. So it doesn't mean that you shouldn't buy a home in April or May, but it means like if you're going to game plan, when's the ideal time? That's probably not the one to put on the calendar. Maybe look at the holidays. Maybe look at the very beginning of the year. And in fact, the summers, oddly enough, have been really, really good for buyers. When you get into the summer months, people are deep in vacations. A lot of people are just checked out. They got kids around. They can't think about buying a house. That can also be a good time. We just passed that time here. So I would say between here and April, probably holidays. That's where you can really find some motivated sellers. Imagine if your house is on the market December 1st, you're a pretty darn motivated seller. So you're looking to go coastal, look for one of those. Look for a vacant home. Look for one that's been on the market a minute. And I say fire away. See what happens.
I agree. I guess the one caveat I would add to that is it depends on your goals. So if you really want something so super, super specific and you're having a hard time finding it between now and April, home inventory is going to go down and then it's going to go back up. So we'll probably be about in April where we are right now. That would be my guess. So if you're worried about the amount of inventory and the amount of options, then you either, buy now or buy soon or wait until inventory starts to increase next year. But a lot can happen by then.
Yes, true.
All right, what we got here? Have you had previous success in negotiating down contract price for a new build? Gosh, in the market the last couple of years, absolutely not. What about you, Derrick?
I've seen it, but it is hard. What's been happening lately is these new builders are reaching out to me and asking me if I pre-approve buyers that I would like to get on a list and stuff like that. So I think if there were ever a time, maybe now would be it. Remember though, when you're buying new construction, you're buying the most expensive product on the market. And if you're buying late phase new construction, it is the absolute most expensive product on the market. So when you look at a situation like right now, you might be better off getting in more of a mid, somewhere in the middle of a construction project, not at the very beginning, because they're still going to say, oh, well, prices will come back. They won't move too much. The very end, you're paying top dollar anyway. So yeah, you can negotiate. Everything's negotiable. You could always go to a new build project and say, hey, I know you want 680 for this thing. I'll give you 650 and see what they say. But it is usually not the case that they have no one to buy that home because they're selling them 6-8 months before they're finished.
Yep.
In most cases.
At least.
So it's harder.
I will say it depends where you're looking. I know like there are a lot of developments or communities within the Three Roots community that are nearing the end of their phases, and they still have a list of, you know, 1,000 people or whatever it is. So you have maybe a couple of hours to decide whether you want to accept their offer, and that's basically it. If you're going to look farther out, if you're going to look into Chula Vista, if you're going to look down, you know, out into Valley Center or something like that, absolutely you're going to have more opportunities. I just got a message from Lennar, which is my favorite. Okay, absolutely not my favorite developer. And I just got a message like literally 30 minutes before I got on this call with you, where they're actually now once again working with real estate agents when over the last 2 years they have not. They said, screw you, real estate agents. We're not giving you a penny. We don't want these buyers to be represented. We want to take advantage of them and do whatever the heck we want to do. And now they're finally saying, okay, real estate agents, we would love to work with you again. You know, don't you love working with us? No, we don't love working.
What are they offering? 2.5?
It's not a percent, it's a flat rate. And it's not terrible. You know,
Okay.
and for me, there are some real estate agents out there that say, oh, I'm only going to help you buy this house if I get a whatever percentage. And I'm never going to be that agent. As long as there is some compensation, I'm basically always going to help you because I want the best for my clients. But yeah, I just had a client close for $1 million home, and I got about 1/10 of what you would call a normal commission here in San Diego. And it's fine. Like I still help them get that house, and they're so excited.
Ooh.
They've been waiting forever. So it happens sometimes, and that's okay.
Well, but you know, sacrifices do need to be made. That's for sure. In some cases, but it's insulting to, in my opinion, what they've done to the real estate community. They should pay the price for it. By the way, Three Roots, I have someone in contract in there. They originally told her the home was going to be done in September, and now it's March. So that's another thing about new construction. Just FYI, you have. Are
you willing to say which developer after I just completely bashed Lennar for like 3 minutes? No, you're not gonna tell us.
I'll let you tell us.
All right, next question. Ebonk, I'm not sure what he's saying here. New home insurance start rejecting.
No home insurance. Okay, so if you get a situation. This does happen where people will go and get in contract on a home, and then they'll like call their insurance company, and the insurance company would be like, hey, yeah, we can't insure this property. And then they'll call another insurance company and they'll be like, hey, we can't insure this property. So I get frantic calls from buyers from time to time. Are like, hey, I've called 5 companies and no one will insure this property. A couple of things. There's called the California Fair Plan. So you can always get insurance, but also like having the right insurance broker is key. You guys, if you have somebody, Dan, let them know in the description. I've got somebody who's great, and every time that happens, he always solves the problem. So it's really just it's not a macro thing. It's like, hey, some of these big box companies don't want the fire risk and all that, but you have the California Fair Plan, and you have a broker option where you can check on hundreds of companies with just checking in with one place, and which is basically what I do on the loan side, and it works out really well. So if you've run into that, and hey, these insurance places are rejecting me, or they're saying they won't insure these properties that I like, just know there is a solution for that.
And now you're talking, so this is 100% has to do with high fire hazard severity zone properties. Is that correct?
Yes. Yeah.
So
that's the big thing.
Yeah, there's been a challenge in San Diego, especially over the last year and a half. And, another thing to keep in mind is, man, they've been really inflating those prices because fewer carriers are actually insuring people in high fire hazard zones, which we have a few of them here in San Diego, unfortunately. So I've heard of people's, premiums going up by, 300% over the last year or so. So
wow.
Something worth checking out, like when you're looking at homes and you have a really good insurance agent, I wouldn't take advantage of them on this, but you can actually ask them ahead of time and say, hey, we have an offer. We think we're going to get it probably accepted on this house, or we at least have a good chance. Can you give us an idea of what the insurance premium would look like? That's when you're running all your numbers and you're paying a lot of money to live here in San Diego, you really want to know what all your numbers are going to come out to. Don't just make assumptions, actually reach out to those insurance agents and get some ideas on what that's going to look like.
Happens in Riverside County a lot too.
Oh yeah. Yeah, absolutely. Due to low rental inventory, is now a good time to buy a small condo or should I wait until 2023? Just want to have a place to live. Man, there's a lot that we don't know here. You know, like how well do you know San Diego? How comfortable do you feel with buying in one area versus another? Do you need to feel it out and understand what neighborhood is really right for you? What type of budget do you have? Can you find what you're looking for in those budgets? You know, I think we've answered enough similar questions for you to probably get the impression that we're not going to suggest that waiting 6 months is a good idea necessarily. I don't think it's the worst idea in the history of buying a house, but at the same time, there's not nowhere near enough confidence in prices coming down for it to make sense to wait.
Yeah, I think you get what you do in a situation like that where you're like, okay, I think I want to buy, but I'm not quite sure. Part of the reason that you're hesitant is because you don't have all the information yet.
Yes.
And so what
Good
you
point.
need to do to close the loop is get all that information. And what that means is you get pre-approved for a loan and you see, all right, pencil to paper, rubber meeting road. What does this look like for me? Okay, here's places that I like. I've seen them online. What would my payment be? What would my payment be? Now you're accumulating those last pieces of information, which are really important. What is my payment going to be? Where am I going to live? Those are huge pieces to that pie. So accumulate that information, and then you'll be in a better position to strike. If you see something that's like, hey, this is a place I would actually love to live. It's right by my gym or whatever. It just came on the market. Now you're starting to see that's how you play the real estate game. Get pre-approved, hawk the market, look at properties, wait until one talks to you, then you strike on that thing. As soon as you see the one, you'll know it'll speak to you. You won't have to second guess it. And when you see that one, you go for it. Now, it may take a little while looking on the market to figure out where the market's at, to know what a good deal is, to know when one speaks to you. Take that time, spend that time. This is a big investment. Spend some time on it. But make sure you accumulate all the information first. Dan, this is a great question because so many times people will say, well, I'm not going to, we decided not to buy. But you didn't even get pre-approved. People tell me this all the time. They get referred by someone and then they're like, well, we decided to hold off. How could you have decided that without knowing all the information? And so there's assumptions there. Oh, it's going to be expensive. We're going to have this. We're going to have that. Find out what that stuff is first. It's free. It doesn't take much time. It's simple to do. And you can make a more informed decision.
It's called the research phase of buying a house. You know, really, really dial everything in and figure out what makes the most sense. I did want to take a short little commercial break here to let you guys know about Derrick's channel. If anyone's watching right now that is not subscribed to Derrick's channel, go check it out. Derrick Evans, DerrickEvens. I have a link down in the YouTube channel, and he's on here. I mean, at least 18 times a week, filming a brand new video about living in San Diego, about mortgage rates, about buying a home and making smarter purchasing decisions. So definitely go ahead and check that out.
Appreciate
I don't do that enough. So yeah, there you go.
Thank you. It's great.
And I just appreciate you being on. All right, Ebon is back. He says he agrees San Diego is the best place to raise kids. My son loves to go to the beach. Not really quite
love the beach.
Wonderful comment. Yeah, they do love the beach.
They love it so much. It makes them laugh giddily. Playing in the sand, getting dirty, the water coming after them. It's one of the coolest things. Really is.
I love it. And how can you not be happy seeing your kids be so happy out in the sand?
You will be happy.
All right, Joe says, should wildfires and potential rising sea levels be a factor when looking at neighborhoods? Will some become more or less desirable if things change? So wildfires, yes, they definitely should be. I would say the biggest risk you run in San Diego is when you get into very, very rural areas. Then you really have to start worrying about it. A lot of times, like what you can do, in fact, I did a whole video on fire hazard safety here in San Diego that I'd recommend checking out. No, I'll plug myself. So you can check that video out. Just know what the risks are. Understand that it's potentially could be a little bit more expensive if you are technically in one of these high fire hazard zones. And then, you know, I don't know, with sea levels rising, I can tell you this, in most coastal regions of San Diego, where they're starting to see, you know, shorelines go away, a lot of times they're coming in and backfilling a lot of that stuff. So they're minimizing the dangers of that. I don't know. As far as global warming and what's going to happen with the sea levels, I don't know that I have a good enough response for you. Maybe Derrick does. Let's see what you got.
Well, I'll tell you, you know, living in Del Mar for many years and watching some of the coastline sort of erode away and stuff like that, made me wonder about those things. And I talked to a guy who bought a $20+ million house waterfront. Okay. And he explained to me, and it was like 14 seconds in, it was so over my head. But basically, what they do with those homes to secure them is pretty darn ironclad. And so I don't anticipate anything like coastal being an issue. When you talk about fires and things like that, look, anywhere we live in the desert. Okay.
Yeah.
San Diego is a desert. That is flanked by the ocean. So it is a desert climate. That's what it is. It doesn't rain very much here. You wonder, how could this many people live here and it never rains? It doesn't rain in months. Then it finally rains. You're like, hallelujah. But, we are in the desert, so it's going to be dry. So fires are going to be something. The good news about those fires is that the technology and the process for fighting those fires is such that if you just listen to the warnings, they'll tell you long ahead of time to evacuate areas. This is why we haven't had casualties the last several big fires that we've had, because people listen to the evacuations. They tell you to get out. I don't think that impacts values. I really don't, because it is sort of a natural disaster type situation. I don't think buyers are sitting here going, maybe it's in a fire zone. Maybe we shouldn't buy it. I really just don't see that. People are like, oh, it's in a fire zone. Okay, we need some insurance. Gotcha. They don't really factor that in as like a buying decision situation. So if it's not a buying decision, plus or minus fence sitter situation, then I don't think it impacts values. And I wouldn't want to purchase based on that. However, like Airbnb, probabilities, that is something. Even if you're buying a single family home to live in, looking at areas that allow Airbnbs or that are more Airbnb friendly is not a bad strategy, because in those areas, people will be buying Airbnbs, especially if they're locked out of others. And that does help values. So from an investment standpoint, even if you don't plan to Airbnb, kind of knowing what's going on with the Airbnbs, and I know you've been doing videos on this too, Dan, that is a smart move and a worthy piece of research.
Yeah, absolutely. With a lot of rules changing here in the city of San Diego that I think I'm going to have a video on in 2 weeks. So coming soon.
Nice.
Another thing about fire safety to note is if you actually look into the individual cities throughout San Diego County, some of them have established new fire safety protocols. I know, for example, like Scripps Ranch has a fire safety council that they established after they had their last major fire in the early 2000s. And they're actually doing a lot of things to help mitigate the risks. So regardless of what the actual fire hazard safety zones are, if it's in a fire, that's such a mouthful to say. Regardless of whether it's in one of those zones or not, it's usually not taking into effect the actual mitigation that has happened on a city level. So these are things that you can research on a city level. I have some information on some of the cities in San Diego that are worth looking into on that. And I think that is something that we're going to see improve significantly over time.
Agree.
All right. Sunshine. By the way, I think I said he last time Sunshine made a comment, and I don't know. He, she, whatever you go by. I apologize if I said that incorrectly. So Sunshine says UTC, Oceanside, Rancho Penasquitos, which has the best appreciation for condos? Derrick, I'm going to let you go first on this one.
Yeah. We could probably look something up on this and get you specific info, but I would say UTC most likely. UTC is an area that sort of condos are expected. Single family homes in that area are definitely very expensive, and it's a more walkable place than like Oceanside or Penasquitos for the most part. So because of that, I think you'll probably get a little bit better bang for your investment buck. But that's probably something that you could do a consultation with Dan on. He could pull some research for you and say, hey, so here's the data on condos in these areas. Let me just show you what we found. And so you could get a little bit more ironclad information. My gut is going to tell me, though, Dan, if you do that consult, let me know. UTC is going to be the winner.
Ah, man. So many things going through my mind. And I'm like, as you're saying that, I'm going back and forth by each because of different reasons. I will say this, Rancho Penasquitos, I believe, was number 2 on the most appreciation over the last 12 months out of all of the cities / neighborhoods, because you have the city of San Diego, and I like to break that up into different neighborhoods. So it was a very, very high up there. And, we have Apple is building a campus for they just purchased a campus for 5,000 plus employees that are going to be stationed there by 2026. So that's in Rancho Bernardo, which is right next to Rancho Penasquitos. UTC, like on paper for most areas, would probably be like make the most sense for a condo, because You have, you have a university right nearby. You have the trolley line that now goes up to UTC. You have that amazing mall over there. It's very centrally located. There's so much great public transportation. There's so much opportunity, and there's always going to be a demand for people to want to live there. And you're coastal. And then again, on Oceanside, I think has the most, it's one of the places in San Diego where people say, Dan, what neighborhood, what city in San Diego has the most opportunity for appreciation and growth? Oceanside is almost always one of the first ones that I talk about, because it now has a walkable downtown area. I don't know, like, when the last time you've been there, Derrick, but it's awesome. It's great. It's really made a huge turnaround in the last 15 years, but specifically in the last 5 years. They're talking about Ocean Camp that's going to be built, which is like this crazy surfers paradise resort and condos that they're building out there. And there's just a lot going on. If you look at the new construction in San Diego, there's a lot of high rises going downtown. There's also some pretty tall and fun buildings that are being built in Oceanside that is just helping to develop out their downtown area. So if you rephrase this question and said, guys, what are the top 3 places that have potential for appreciation for specifically attached properties? That would probably be my list.
Nice job, Sunshine.
Yeah, well done. Moving to Rapid City by my buddy Tristan Edmond. I hear guys named Tristan are pretty cool. Thank you so much for the wonderful comment that I don't know how to respond to. Yeah, you're a pretty cool guy. I appreciate you, man. Thanks for tuning in.
I love those fun comments.
All right. So Angel says the Fed has already announced rises in rates through 2023. I can't wait. By the way, next time you're on, I'm going to have a full soundboard, and it's just going to make all this way more dramatic. I know how much you love soundboards.
Oh, yeah. Yeah. Get on that. That's good stuff.
Yeah. How will this affect the housing market? Will asking prices decrease to maintain affordable mortgages? And we already kind of went through this, but Derrick, give us the 30 to 60
level
feel.
Yeah. So rising rates, remember that's one of those things. It's like, okay, it's a bad thing, but it's known and it's here already. So really there's more opportunity for that to improve than to get worse. So I would not plan on that being something that gets much worse. Maybe it does get a little bit worse, but overall see that as an opportunity and not a deterrent, because it's room for things to get better, and in fact, dramatically better. And if it happens quickly, when it does, you'll see the market move very fast. And at that point, it'll be too late. It'll be one of those things where people go, oh, I waited until right now. There's going to be a mad rush of people. So expect that rates will go down. We don't know when, but it's very likely that'll happen. And the Fed raising rates is deflationary. That will be good for bonds, AKA good for rates. It'll get us there quicker.
So, and just one more step back here real quick too, Angel, just keep in mind, if none of that made sense, that Fed rate does not equal mortgage rate. So they are different things and they are not directly correlated. Derrick, how you doing on time? Can we get through a couple more of these?
Yeah. Let's do a couple more.
Okay, cool. All right, guys, we're gonna blast through these last couple questions here. Do you think the City Heights neighborhood will continue to appreciate in value? I think all of San Diego is going to continue to appreciate in value. Number one. Number two, I would say, City Heights is a tough one because it's surrounded by these neighborhoods like North Park, which, historically was not a good place in San Diego either. It really had a huge turnaround in late 90s, early 2000s. And so it started to be like hipster paradise here in San Diego. And City Heights, in a lot of ways, reminds me of what North Park was. So is there opportunity for that to appreciate? Yes. However, I don't see any current plans for that to happen. So it has the opportunity, but it would be for me probably too high of a risk that I would want to take.
Here's a good way to look at this, John. If you are, let's say, so when you look at places like that where you don't really have a good school district, if you don't have kids or like you're younger, that's a great bet to make, right? Because you do get to be near all those things when you're maybe partying a little bit more, walking to bars, doing this and that. But the lack of good schools doesn't hurt you. And so you get to, again, things are bad. There's upside there. As property values get more and more tax revenue comes in, that money goes, a certain percentage of that goes to the schools get better, hire better teachers, the ratings go up, the property values go up. That's something you can count on. There are investors I know who are dead set on this type of investment.
Yeah, absolutely.
That area there is really surrounded by, right, like good opportunities. So I think if you're the right buyer, that's one of the perfect places to be. You could also say the same thing about West Chula. A lot of good stuff
Yeah,
going on over there.
the Bayfront.
But just depends on who you are. If you're a family looking for, you got 3 kids, you're looking for a good school district, that ain't your spot.
Yeah, well put. All right, Angel says, Sunshine Yogini, with the high turnover in military renting in Oceanside, I'd invest in a rental there. Yeah, that's one thing we did not mention with Oceanside. Just another great benefit of buying in Oceanside if you want to eventually rent that baby out. Hanzana says, wait, was your question answered? I also just want a condo. Was it? I believe question was answered. And if you just want a condo, then reach out to Derrick and I. We can help you out.
That's okay. Yeah.
Oh, my buddy, Burn
There he is.
McGovern. What's up, gents? Burn.
What's up, Burn?
We need to do a 3-way and get you on here one of these.
Yeah, let's go.
Angel says, being pre-approved for a loan is a great way to know what you can really afford, more than you'd expect. Great content, guys. All right, it's getting through. We appreciate that.
Nice.
All right, we are going fast on these. Good. Wait. Thank you all. Actually, I have got the pre-approval, but just scared by the interest rates and the Fed's action. Refinance is always an option, right?
Yeah, pretty much. Here's one thing to do also, double check that rate. It may not be, it could be that you're the high rate lender or high cost lender, as we call them, which can make a big difference. Typically now when I quote rates for people, we're 0.5% lower than what they've heard and stuff. And that may not be the case for you, but a lot of times we're way lower. So double check that, and then check out that mortgagenewsdaily.com/mortgage-rates. Check that link. Just keep an eye on rates if that's something that's really important to you. But yeah, you can refinance down the road as long as you still qualify to refinance. You have the appropriate equity and so forth. So depending upon the type of loan you're getting, that may be easier or more difficult depending. Like if it's a VA loan or an FHA loan, the refi process is very simple and streamlined. With conventional loan, may not be the case. So you can refinance. It is something you don't want to plan on it. You don't want to count on it. In other words, you don't want to buy a home and say, well, I can't afford this home right now, and I'm going to eat my savings away every month, $1,000, until I can refinance, and then I'll be whole. Don't do that. But if you can get into something that you can stomach for now that fits in your budget, maybe you make a lifestyle tweak or two, but you're not completely cratering your life for this thing, and expect some upside down the road, it's a very, very good chance you'll get it.
Yeah, and just also keep in mind, all this stuff is scary for sure. It was terrifying the first time I bought my first house. But keep in mind, if you're worried about the rates, well, just keep in mind, if they come down, then demand is going to go up and prices are going to go back up. So if you were to buy now and that situation were to happen, then you more than likely are going to have an option to refinance. Now, talk to Derrick or talk to your current lender and just verify this information so that you can really play these scenarios out. But yeah, I mean, that's what I'm betting on. And that's what Derrick's betting on with his massive mansion, whatever he's buying and building over there.
Developing. It's always scary to buy a house, by the way. It never changes. First one you buy, terrifying. Second one you buy, terrifying. Because it's a big commitment. It's a big financial commitment. So you're always going to have butterflies. You're always going to second guess. That's always going to be there.
Yep.
Always. So it's not a bad thing. It's normal. So it's important to make, an educated decision, get all the information you can, lay it all on the table and say, hey, what's the right move to make? Pretend that you're advising your friend who's in your situation. The best way to kind of step out and go, okay, what should you do, Bob? And look at it that way. If you can do that, you'll make much better decisions.
Love it. All right. And because I'm trying to get you out of here, Derrick, give us a 30-second response to Kyle here. Do you think interest rates will be like the 80s, like 12%?
No, they won't. They'll never be ever again. And in fact, this is a good point to make. Why are we so sure that rates are going to go down? Someone told me that today. Oh, well, I remember when rates were this. This 76-year-old guy I talked to this morning. Well, I remember rates got to double digits. That could happen again. Well, no, it's not going to happen, because at the end of the day, there is such a huge macro push for lower rates. The federal government cannot pay its bills with rates where they are today. Okay, we are upside down. We have been for some time. Rates must be lowered as soon as possible. And so that is something that is not going to change anytime soon until we start making big advancements on the deficit and the overall debt that we have. you're going to see that there's always going to be a need for very low interest rates so the government can borrow money cheap and continue, because we're literally borrowing money to pay the bills. So it's not good if you're borrowing the money at 3% to pay a bill that's at 1.5%. That is not a good business move. Okay. It's terrible on top of terrible. So they're going to push for lower rates. So that's why we're very confident that as soon as the Fed can, as soon as the government can, they will come in, they will make moves to lower interest rates, but you can't do that in an inflationary environment that we're in right now. So it may be a year, it may be 2 years, it could be 3 years from now. I really don't think so. I believe it will be next year. We'll have a refi boom by the end of the year.
Boom. You have a mic you could drop? Don't break it. Don't break it. All right. Angel said, I'd say if you can weather the high interest rate for a couple of years and find a place you want, go for it. And that was for Weiwei's comment earlier. Yeah, I agree. Is just
Right on
make
the
sure
money.
that you can afford it. You know, maybe it's going to stretch a little bit more than you would like, but make sure that you can afford it. And again, like I always go back to how I felt when I bought my first house here in San Diego for $435,000. I'm like, how? I know that we can afford this, but dang, this is terrifying. We had a roommate for the first 2 years so that we can help. Well, our thought was so we can help pay the bills. The reality is we just save that money and then put it into an investment in the property or invested back into the property. And I mean, gosh, that was the best investment that I've ever made. So
Genius.
yeah, genius. Thank you. Appreciate that. UTC is so pricey now. Visiting in October to scout out the market. Anything closer to a detached property for $700,000? Yes, it really just depends on what you want. And reach out to me, and I'm happy to go over that for you. I have what I call a discovery session where we can hop on a Zoom call. I can show you the neighborhoods real time, and we can discuss. But it really just depends on exactly what you're looking for. Can you find it? Yes. Can you find it based on what you really want? Maybe not. You know, I don't know until I have all of the information. And we have a quick little thank you from Weiwei, a quick thank you from Kyle.
You're welcome, guys.
All for tuning in. Can we maybe just real quick, Derrick, do a quick recap? Like, you know, okay, so we're saying the market's not going to crash right now. I'm saying my 1 year prediction is that home prices and home values are going to be at least where we're at right now. If not, I think between there and 10% higher than we are today. Is that about what you would say, or what do you think?
Yeah, I'd say, flat to, let's call it, 5 to 10%,
Yeah.
Appreciation potential in there. And the only thing that could really stifle that is if rates continued to go up. If that just ran away from us somehow, which would be hard to imagine. But if it did, that would be the one thing. So that's the one thing to track. That's why I've been giving out the mortgage rate tracking site, because if people who want to look at this stuff on their own, they don't want to have to reach out to someone to get that information. It's all right there. You can just see what's going on. You can see what's happening. And that's that's the thing that has affected the real estate market. Nothing else has really been a problem for the real estate market. It's just been interest rates going up so much so quickly. And so now that has stabilized a little bit, you're seeing it. I'm seeing it. More buying activity is taking place. I do expect the market to stay strong. But by the way, definitely reach out and do that consultation. Let me tell you, it's so powerful. It's such an important thing to do when you are in the process of what I call the consideration phase of purchasing real estate, to go through and get all that information. Tap into Dan's expertise. He's driving around shooting videos all over San Diego. He knows all these places. He'll tell you, hey, based on what you want, hey, these are places you should consider. Now let's look into those markets in more detail. So the quicker you can get into the detail of the areas that are really a good fit for you, the sooner you can have research, know the markets well, feel comfortable with it. And that's how you want to be when you purchase a home. You don't want to be purchasing a home going, gosh, is this a good idea or not? You want to be purchasing a home going, this is so awesome. I'm so excited. I can't wait to live here. I can't wait to come home here. I can't wait to walk to these restaurants. Whatever it is, you want to feel that way about it. And the more information you have, the better chance you will.
That is so well put. Yeah. The last thing that I want is for my clients a year after they move in to call me and say, Dan, we made a mistake. And luckily for me so far, that has not happened yet. And I do everything that I can to make sure that we avoid that. One last thing I did just want to bring up, or maybe just to bring all this together, you guys, we got a lot of questions, people asking about whether they should buy, whether they should wait. Here's what I'm going to say as far as the market. If you are a potential buyer out there, no, there is less inventory in this market. It's starting to go back down. There are fewer deals, and potentially moving forward, we could have rates increase again before they decrease. But at the same time, no, interest rates more than likely are going to come down over the next couple of years, which means demand is eventually going to go back up as well. So anything I missed there, Derrick?
You nailed it, man.
All right, man. Thank you so much for being on. We're definitely going to do this
Love it.
again soon. Probably be on your channel next because we
Yes.
go back and
It'll be on
forth there a
mine
little bit. But thanks for taking time away from your family to talk to us about what's going on in real estate. You're one of the smartest guys I know, and I really, really appreciate you.
Thanks, brother. I appreciate you too. Have a good night, guys.
All right. Peace.